Hi guys, welcome back. So when I started this Haikanashi series, I got so many comments and messages on my you know email and on my WhatsApp, and members were saying that they really find it good. So I thought, since I've told you about how do you invest in positional stocks using Haikanashi candles, it's very important that you select the correct stocks which are fundamentally strong and available on a very reasonable price, right? So I thought, let me explain you today how do you select and how do you filter. You don't know, there are so many stocks. Which stock would you buy for you know investment? So I'm going to give you a very simplified technique, and you can filter through that. This is for people those who don't know anything, those who have no idea. Of course, we filter in a much refined method, but this is for people who don't know much. And I would say that please learn, about the market. That's the best way to go about it. And we will have some very basic course for all of you. Like this course, even if you don't have time, even if you have no time, you can just filter out, like, and you could make a sip, let's say monthly skip a sip of about 10,000 rupees or whatever amount you feel comfortable with. You can create a SIP by learning this course, and you can generate at least, what do you think is a good comfortable return mutual fund gives you? Very safe. It gives you about, you know if a good mutual fund will give you about 15 to 20% return, but here you can in a year generate about 60 to 70% return, or maybe more. I mean, we do generate, in a month we generate about you must have seen the stocks, which we select usually give within a day or two, or 10 days of holding gives you 10% of return. So we do get much higher return, so. But what I'm trying to tell you here, I'm giving you a simple method. Even if you have no time to learn, or you believe it's not your cup of tea, at least do a little bit of understanding, from what I'm going to explain you. And from there you can find out fundamentally strong stocks. So I told you, like, let me take you to my YouTube channel, and this is my you know mm, uh, you know video which is for the positional trades. It's video number 310, right? Watch this definitely, so that you know about the entry and the exit. But at the same time, what I'm trying to tell you here is that this is one part of it, but you have to do a lot of other things. You need to select the correct stock, so that you can filter them out and then create position in them. All right. So what I want to tell you here is that you go to, you need to check fundamentally strong stocks, the stocks which have good fundamentals and which have an opportunity to grow. So where do you get such stocks? So I'm going to take you to a website called screener.in. Screener, right? This is the website, and let me take you here. So this is the website that you have. You must visit this in case you want to, you know, invest anywhere in the stock market. So what you need to do, go to the screens, and you get various kind of filters here, ready-made filters. So you can select any, like you can take the bull cartel, it'll give you all these stocks, right? At least from thousands and thousands of stocks, you have just only a few stocks. There are 579, just take the top ones. But what I would prefer, that what should you be able to, these are growth stocks. You get the growth stocks here, where market expect them to grow. Then you can go to the next, which is loss to profit making companies, the companies which were in loss and now they are profit making, right? And then you can go further to the, like magic formula. Again, you get certain companies, but I would suggest that you go to the filter that I'm telling you, uh, which I felt was a good one: low PE and high EPS growth, right? This is something that you can, there are only 26 results you get out here. And in this, what you need to do, these are low PE companies, and the dividend yield is pretty decent, and you can select from that, like I'm going to give you more criteria. So what you need to do, one thing that you have to do is select the companies which have a decent market cap. So ignore this company, like CIL Securities, 13 crores, Comfort FinCorp, 17 crores. Ignore these companies. Creative Casting, ignore this company. You don't need this, right? So for, like RJ Shah and Company, 8 crores. Remove these, right? And one criteria is to have a decent market cap, right? So that is your first criteria, and according to me, a company which has about 500 crores market cap should be a good company. And then what you need to see is the current market price. Don't take the penny stock, like this or like this. Like these are penny stocks. Ignore them, right? They are not the ones where we will be investing. PTC India Limited, no. PTC India Finance, no. We don't want to invest in that. John Dray Capital, ignore it, right? Now, once you have out of 26 companies, how many gone? We will ignore 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? And 11 and 12. So out of 26, how many are left? If 12 gone, then you are left with 14. Now, out of 14, what you do, just remove these companies. Then out of these 14, what you need to do, you can find out, the market price. So the penny stocks you will be removing. You will not be keeping penny stock at all. Just remove them from your watch list. And after that, whichever companies are left, you're going to watch them one after the other and see how is their performance. So let's look into the Andhra Sugar. First, you need to find out Andhra Sugar's fundamentals. So you go here, and if you want, you can just click it here only. Andhra Sugar, here it is. So market cap, good, pretty decent, about 1200 crores. Stock P is pretty decent. Current price is 442. Book value is 343. Right? 52-week high and low. High was 715, low was 279. Look into the company's pros and cons. You can read this. Anybody who's little understanding of investment should be able to do it. Company has been maintaining a healthy dividend payout, right? The company is giving a good dividend. That's one criteria met. Then the company has delivered poor growth and company has low return in equity. Then let's see what are the peer companies. So the comparison with peer companies, if you see, except GHCL and Polyplex Corporation, it has a relatively it has a decent, not a bad PE. In fact, all the sugar factories don't have a good PE in general. I mean, some of them have, but like many of them don't have a good PE value, right? And then let's see the market cap, right? Market cap is also pretty decent, not bad. Then dividend yield is much better than the other peer companies, right? Dividend yield for this particular stock is a decent yield, right? Quarter profit variation is 2.2. Sales, not bad. Sales are okay, but very less with respect to the other. And I believe it's the smallest company as far as the market cap is concerned. Quarter sales, that's a variance is basically minus 5.313, and current market price to book value, the ratio is 1.29. That's okay. Now what I believe, this is the comparison with the peer companies. Now let's see here what's happening to the sales. There has to be a growth in the sales. That's our first criteria. So let's see here, is there any growth in the sales? Yes, there is growth, but I wouldn't say that very, very dramatic growth. It's a reasonable, slow growth. And expenses have also grown. And we want to see what's happening to the operating profits. So operating profits are growing and operating profit margins are also going, right? Which is a very, very positive point for us. See, in 2015, it was 2.52%, and in 2017, it's 24.68%. So that's a good sign. And then let's go further down. Net profit initially was negative. Now it has become very, very good, right? It's a turnaround company, you can see. Then let's see further, 2006 to 2017, the sales have become almost double, right? Operating profits have gone up. Operating profit margins are almost stagnant. In between it dipped, now it has improved and it is further improved. So that's a good sign, right? And then let's see profit before taxes. So let's see what's happening to the profit before taxes. That have gone dramatically up. If you see, from 84, it has become 178, almost double. Not very, very high, but still they have gone up. Dividend payout. Dividend payout has actually gone down. Like they were paying 33.72%, but now they are paying 22.5% dividend, right? So that's okay. Now let's see the borrowings. What's happening to the borrowings? Borrowing is an important factor. So borrowings basically is almost stagnant. What it was, it reduced in between. See here, if you see here, it reduced and now it has bounced back 326. See, the borrowings from here has become almost stagnant. In between, it dipped for a while here in 2010, and again their borrowings have gone up. So that's not a good sign. Now the most important thing is, are they being able to generate cash from their operating activities? They have been consistently being able to do that, right? And rather, the cash from their operating activity has become higher every year, right? That's a very, very positive sign. And in the end, you can see the net cash flow. It is pretty decent, not bad. So this company looks good. Now, what you have to do, this is Andhra Sugar, right? This is Andhra Sugar. Now, what you have to do, keep it on your radar. And as I told you, use 𝐼𝐾 candles and see if there is any probability of, buying is coming or not, right? That is what you need to check. So let's see. Let me remove something from here and I'm going to add up Andhra Sugar. Andhra Sugar. So where is Andhra Sugar? Let me just, Andhra Sugar, is it Andhra Sugar? Andhra Sugars. So Andhra Sugars here. Now let's see how's this company look like with our strategy. 𝐼𝐾 candles. How does it look like? What do you have to do? Make it 1 day time frame and put the 𝐼𝐾 candles and see how does it look. Would you like to invest in this right now? So according to our 𝐼𝐾 strategy, no, it does not have entry right now. Why? Because the candles are, red. We want green flathead candle, right? So this is how you can filter out stocks. I can take one more stock with you people so that you can understand. And as I told you, select this filter, low PE and high EPS growth. Let's say something here, a good decent, market cap. So let's say Balrampur Chini. Okay, that was a sugar stock. Even this is a sugar stock. Leave it. Let's look into the CPCL, right? Let's see this company. What is happening in this company? So CPCL has a very, very decent, market cap. P is very decent. Current market price, book value is lesser and the current market price is high. Fine. Dividend yield is about 7.31% and 52-week high and 52-week low. Okay. Now stock is providing good dividend. Company has a good return on equity. Track record, 3 years ROA is very good, 27.8%. Company has been maintaining a healthy dividend payout of 23.47%. And these are the cons. One of them is, the biggest one is the contingent liability of 15,421 crores. I don't think so we will invest in it. You see, the liability is more than the market cap. That's not a good idea. 15,421 crores. Chennai Petroleum, right? And let's look into what's happening into their cash which is generated from the operating activity. Of course it has grown, but again there has been a dip in year 2017. So if you want to invest, I don't think so it is good for investment. Let's look into some other company with good market cap. Let's see Dalmia Bharat. So it doesn't have any con. It has pretty much good, the pros are pretty high. And you can just compare, it has a very, very decent PE, 2.82. That means if you're investing 2.82 rupees, you're getting a 1 rupee, you are earning by investing, 2.82 rupees, earning 1 rupee from it, which is a very, very good amount of, which is a good PE. See, all these sugar mills, sugar companies have very small PE, right? So out of this, I was finding Awadh Sugar very attractive. We will check Awadh Sugar as well as Dalmia Bharat both. Now let's go further down and see what's happening to the sales, right? These are the stocks that I'm discussing with you are for investing purposes, not for trading. Like you keep them for at least 1 year in your portfolio. Now check what's happening with the sales. So sales are, growing definitely. Let's look into the straight away to their cash. Oh god, cash is negative, right? So this is not a company for us. From 266 crores, 6 crores, it has become negative and further negative, and it's been increasing, right? So this is not that we would like to enter into, right? This is Dalmia Bharat Sugar and Industries Limited. So you have to filter out, like it'll take a lot of time for you to filter out deep industries. Let's look into this. Promoter's stake has decreased, so you can read through all that. This is fine. Company has good consistent profit growth of 43.93% over 5 years. Promoter's stake has decreased. That's a concern. If promoter doesn't believe in his own company, that is why he's decreasing, right? So how can others trust the company? Promoter stake should be at least 50%. Remember that. I'll tell you how do you check that as well, right? And look into the peer companies. So of course Reliance, SR Oil, etc., etc. So deep industry has a decent, market cap. Let's go further and see what's happening to the cash activity. I am very much bothered about what's happening to their cash activity, which is definitely increasing every year. See from here, there has been a growth in the, cash from operating activity, which is a good sign. And borrowing is also increased, which is not a good sign, but since the operating activities are producing good money, so it's okay. So deep industry is a good, investment. This, and let's go back here and see what's happening in deep industries. Can we invest in it? Let's see. Using our strategy of 𝐼𝐴 candles, deep industries. Let's see. Let's see here. So today only it had a flathead candle, right? So where could have we entered? We could have entered at this point. From the bottom we could have entered and we would have enjoyed. This is 1 day. If you want, you can even make a longer time frame. 1 week. 1 week will give you, the longer your time frame, the longer you can keep the stock in your portfolio. So I would suggest, if you are planning to invest money, keep the time period as 1 week. Let's look into a few more stocks. Let's look into quality. What's happening in the week graph? It's still in the sell zone, right? Let's look into Panama Petroleum. See here, it's a big support it has taken and it's heading up, right? So this Panama Petroleum, it looks very good to me. Should we check its fundamentals? Let's see. Panama Petrochem. So 1,300 crore company, not bad, pretty a decent, market cap. and dividend yield 0.3%, and stock PE is 22.48, which is okay. And then, company has reduced debt, virtually debt free, expected is expected to give good quarter. The company's delivered poor growth. These are the cons. Now, comparison wise, it's okay, decently placed, right? Market cap wise, it's the smallest one. And then let's go further down and see what's happening from the cash from the marketing operating activities. So that is pretty decent, not bad. So let's just look into the borrowings also, right? Borrowings should be either reducing or there should be no borrowing. So there is only 32 crores rupees debt. If you compare it with their market cap, it's pretty decent and it's very negligible. So that's okay, right? So this could be an opportunity for us to enter, because this looks a very, very promising, look at the moving average, it's taking a support. So to me, it looks very promising. So this could be a probable entry point for us. All right. So this is how you will select, like you can go to the filters given in the screeners.in, and these are all free screeners. There is nothing that you need to pay. You don't even need to log in. Just take out, from thousands and thousands of stocks, you will get a few stocks and put them on your radar and check what's happening. Does it have a flathead green candle or not? If it has, proceed ahead, look into the fundamentals. If the company has good fundamentals, create position. That's about it. That is what, called empowerment, and that's what called, creating portfolio with the right stocks, right? So what I'm saying, that little bit of education in stocks and in the stock market will help you creating the right kind of portfolio, right? So, and be vigilant, like whenever you see a flathead candle, exit your position. If you don't want to keep it, like if you want to rotate your capital, I've told you, just you have thousands and thousands of stocks, go to some other stock which is giving you a flat bottom green candle, go to that, which should be fundamentally strong. So what happens, in the market, sometime like nowadays IT stocks are up, sometime IT is up, sometime petroleum stocks are up, sometime metal stocks are up. So like that you keep finding out. Like look, today science is so beautifully up. Science is so beautifully up. So Science was one of our stock which we actually have selected and we are invested in it. Look into its 1 day graph. It's given a flathead candle. Look at it, started from here only, and today it's just give a bumper, movement. So this is the beauty of selecting stocks, and find out the fundamentally strong stocks, right? So hope I'm clear. I mean, I will try to do another analysis and figure out, to give you another way to find out the stocks that you would like to filter. But if you want to understand more clearly and more, how do you create SIP, which sector to select, how to select a sector, how do you invest in those sectors, and which stock would you like to select, if you want to understand all that, you can do our basic course. This is throwaway price, 5,000 rupees, nothing for the lifelong learning. And this course will teach you how do you invest. It is for every housewife, every person who's busy, who's got no time, but at least half an hour, 45 minutes you can spend a day or two before you want to invest your money, and go ahead. At least you will know what you're doing. Nobody will be able to fool you. So this is my suggestion. Rest is all your choice, and how do you want to go about it, you can just decide. And we are just starting with our nifty course on 1st of May. It's one of the course which will give you money every single day. Just, I mean, this is barely any fees for it. This kind of a course, people charge lakhs and lakhs of rupees. So just one, strategy. I mean, there are 5-6 strategies that we will be teaching you, but one course only can give you, I mean, if you want to trade in the market, this will be good enough for you, right? So you can make a choice. You have advisory, you have position course, you have, all these courses are coming soon, but this will be immediately launched within 1 week's time, right? So With this, I will sign off, but I'm surely believing that if you are in the market, please don't lose money. And that will only happen when you take responsibility of your trades. If you don't take responsibility, if you believe somebody will give you exit and entry, I'm telling you that is not a possibility. You will always be a loser. So be the person who's empowered, right? Be the person who's empowered by, knowledge, and then trade in the market. So with this, I'm signing off, and we meet on Monday again. But I really want you all to take a decision so that you can be empowered people in the market. With this, I'm signing off. Bye bye. Good day. Enjoy your weekend. Bye.